All right, welcome back to our YouTube channel. In this video, we shall be talking about the liquidity provision, smart investment or a trap. In the MetaWhale ecosystem, is that liquidity provision, is it a smart investment or a risky trap? So that is what we'll be talking about. Now, everybody's talking about DeFi, passive income. But what about MetaWhale? Do you know about MetaWhale? Are you a member of MetaWhale? If you are not a member of MetaWhale yet, you need to become a member of MetaWhale. But here I'll be talking about providing liquidity. Is providing liquidity in MetaWhale a legit way to build wealth, or just another crypto trap? Now let's break it down in simple way. Let's break it down. Now basically, you provide liquidity here and you are able to make some profit from the sharing of profits. But before I get into that, MetaWorld is a decentralized smart contract, a DeFi project built on the Polygon blockchain. This can help you raise a lot of money, especially if you get involved in the gateway into the ecosystem, which is called the tactics and the strategy. Tactics and strategy. This is the gateway into the ecosystem. This is the wealth gateway into the ecosystem, where you can participate in engagements, various activity within the ecosystem, and it will help you to make a lot of money. It will help you to make a lot of money. But let's go back into the main bottom line. What is liquidity provision? It's very simple as ABC. You take your money and you provide a fixed deposit, just the way you take your money and provide fixed deposit in your bank, or you take your money and take the money to the money market of your bank so that they'll be using your money to do business. So what you do here when you provide liquidity is that your money is made available for those who want to exchange their coin in the Whaledex ecosystem. In the Whaledex ecosystem, this is where you can buy and sell any cryptocurrency. This is where you swap your CES to any coin. And we have some pairs. Let me just go into the pairs that we have in this. We have various pairs. The CES USDT pair, you have the Polygon USDT pair, and you have the Polygon DAI pair. These are their returns, as you can see, 0.3 and the likes. But let's go and look at something. This is the ROI daily. Look at the ROI daily. Not daily, annually, please. Annually, not daily. Let me take my pencil to help. This is the APY annually. This is what you'll be getting annually. But here is the secret. Now, look at the money they made in a day. 8.4 in 24 hours, 8.4k dollars, $9125, $862. I believe those of you watching this video are members of the ecosystem, so you know how to find your way into this place. So basically, this is the profit, and the profit will be shared among all the persons who has provided funds. Now, if you go further again, you see the total amount of volume of transaction done. Then let me use another color. To explain this. Then let me use this yellow. This is the profit made. This is the amount of money made. Now, so this money is what will be shared to everybody who has provided liquidity. So the question is, what amount of money would I make? Basically, your return is the return you get. I'm coming. Just hold on. Okay. The return you get basically is the shared profit. This fee, 24 hours, is what they will share to every member who has provided liquidity. Now, so why some investors like this? Is it really a good potential income for passive income source? Is it very necessary? This question is a question you need to answer by yourself at the end of my explanation. Now, basically, you've understood what we do in the liquidity provision. Now, one thing you need to know, that this ecosystem is a very promising ecosystem. There's potential for passive income. The early investors, those who have provided liquidity early, would have gotten more return. As more persons are coming in with liquidity, the profit available for sharing will be reduced. But what this thing does when you provide liquidity is that it helps to support the project liquidity and growth. This is going to be helping more persons to be able to to basically, the more the liquidity, there is high tendency that the coin will rise. Do you understand? So these are the advantages. Now, what you must know again, let's talk about the honest risk involved. I've told you that you earn passive income, you are helping the community to become stabilized, you are helping the community to grow. But the question is, what are the risks involved? We must know that. In permanent loss, because let us look at this. Imagine I provide liquidity with CES. Let me just, our interest majorly is CES and USDT, or Polygon and DAI, stablecoin, Polygon and USDT. So you can see CES is volatile, Polygon is volatile, Polygon is volatile, DAI is stable, USDT is stable, USDT is stable. So let me use CES USDT as a case study. That is where most of us want to provide liquidity. So when you are providing liquidity here, 50% will be CES. I want to provide $100. I have $100 worth of CES. Now, you will need to bring $50 worth of CES and $50 worth of USDT, and you will provide staking. Now, here is the limitation. In this situation, you can have permanent loss. If the value of CES rises, you will enjoy the appreciative value of the 50% CES that you have provided. But in the other USDT that you provide, you converted your CES to USDT, you have permanent loss because that CES has gone, and that USDT, when you come back, it has left you where you bought it and it has gone. So when you swap it, you'll be buying your USDT, using your USDT to buy CES at a higher price. That is a loss. Number one. Number two, smart contract risk. Token volatility. This coin is volatile. CES is volatile. Polygon is volatile. So there's tendency that you will lose as a result of the volatility of this coin if you put your coin on stable USDT. However, don't forget that you are getting some profit. But I will show you something. I will show you something before the end of this video. And another thing is that although the ecosystem is huge, but for smaller ecosystem, there's higher uncertainty. But fortunately, our ecosystem, the MetaWhale ecosystem, is huge, so you can enjoy good profits. So now, is the reward worth the risk? Let me go to my pool. Let me go to my pool, my own pool now. Let me go to my own. Let's see my own farming. My own farming. Let's see. Let's look at my own farming. Oh, it's not loading. It's here. Beautiful. Look at it. I've opened it. This is my own. I provided $71 about 2 months ago. What have I earned? I provide liquidity of $71.11. Now, I'm losing. There's a permanent loss on my coin. Oh, don't forget. If this coin CES appreciates now, although fortunately I didn't use CES, but let's say I provided CES at $8. I provided CES at $4 thereabout, or $5 now, and CES now rises to $10. There's impermanent loss. But what am I gaining? So far in the last 2 months, I have staked this. I've just gained only $2.63. $2.63. For me, this is not a good deal. For me, that is my own opinion. So you check it and see the pros and the cons. If it's something that you would like, if I want to add liquidity, I'll add more liquidity. For me, I don't want to add liquidity. I'll prefer to hold my CES. I have some CES. I had to do a research to see if it's worth putting my CES into this liquidity. A lot of persons are putting their CES into liquidity. Fine, it's not a bad idea. But for me, I don't think I will want to put my fund. I would rather hold my coin and allow it to appreciate, because based on the various activity coming into the ecosystem, we're going to be using CES for tactics and strategy. We're going to be using CES for everything around the ecosystem is built. Everything in the ecosystem is being built around the CES. So I would prefer to hold my coin rather than stake it. Look at what I've staked for more than a month. What I've earned so far is 2.63. And look at this. The APY is 8% annually. Look at it. APY is your annual return. APY by the time, but man, we just need to understand these things so that we would make informed decisions. So my own advice is that take advantage of this information and build your own system, build your own community through the tactics and strategy. Build a massive team, build wide and build deep. The realistic profit is not, the profit is low. The ROI is low. Look at what I've gained so far. So the risk to reward ratio for me is not very encouraging. So the question now, who is this strategy best suited for? For those investors, those who already have huge amount of money, I think providing liquidity is good for them. For those of you who are starting small, who don't even have much funds to provide liquidity, all I will advise you, use that money to upgrade, number one, then begin to build a big team, build a heavy team. Don't invest blindly. Educate yourself first before you take any informed decision. I hope this video is helpful. If it's helpful, click on like and subscribe to our YouTube channel so that you'll be getting updated information about crypto opportunities, especially for beginners, and DeFi information. If you want to know more about DeFi, drop on the chat on the comment box, drop a chat box. Just encourage us, like our video so that you encourage us and know that we are truly giving you value. God bless you. Subscribe to our YouTube channel and let's see how consistently build wealth through this amazing ecosystem known as MetaWorld. My own advice is that take advantage of the tactics and strategy and leave this liquidity pool for those big investors. We have whales in the ecosystem. God bless you.